Hey everybody! Hope you're all doing well. Welcome back to the channel. We're thrilled to have you here. The market's been on a tear lately with stocks reaching new highs. But can it last? Can stocks keep climbing higher, or are we due for a pullback? That's what we're diving into today. We'll explore the current market conditions. We're going to break down the key factors that'll determine whether this bull market's got legs or if we're headed for a correction. From economic indicators to investor sentiment. So buckle up, grab your notepad, and let's get right into it. There's a lot to cover, and you won't want to miss a thing. First things first, we got to talk about the economy. When the economy is roaring, businesses are booming, profits are soaring, and stocks are rising. We're looking at key indicators like GDP growth and employment. Consumer spending is the lifeblood of the economy. All right, so the economy's humming, but what about the companies themselves? We need to see those corporate earnings. Are companies growing their profits? Are they expanding? Are they innovating? We're talking earnings per share, revenue growth, and guidance for the future. Wall Street is watching every data point. Now let's talk about the Federal Reserve. They control the money supply and set interest rates. Low interest rates make borrowing cheaper for companies and encourage investment, sending stock prices soaring. But if the Fed starts raising rates again, it could put the brakes on this bull market. Inflation, the silent killer. Inflation eats away at your purchasing power and can put a damper on economic growth. When inflation's rising, companies face higher costs and pass those costs on to consumers, which can hurt corporate profits and send stocks tumbling. Market sentiment, the fear and greed roller coaster. Stocks are driven by supply and demand, influenced by investor sentiment. When investors are confident, they buy, sending prices higher. But when fear takes hold, everyone heads for the exits, causing big market drops. Sentiment can change on a dime. Geopolitical events, the wild card. Geopolitical events like wars, trade disputes, and political instability can create uncertainty and fear, sending investors running for the hills. Some companies might benefit, but others might suffer. Stay informed and adjust your portfolio accordingly. Sector performance. Don't put all your eggs in one basket. Not all stocks are created equal. Some sectors might be on fire while others lag behind. It's all about the economic cycle, innovation, and consumer demand. Diversify your portfolio, spread your bets, invest in different sectors, and you'll be better positioned to weather any storm. Valuations. Are stocks getting too pricey? Are stocks getting too expensive? This is a question on many investors' minds as they watch the markets climb higher and higher. One way to measure this is by looking at the price-to-earnings ratio, or PE ratio. The PE ratio compares a company's stock price to its earnings per share. A high PE ratio could mean that stocks are overvalued and a correction could be on the horizon. This often leads to market volatility and investor anxiety. Valuations can stay high for a long time, but eventually they tend to revert to the mean. Understanding these trends can help investors make more informed decisions. Government policies, the visible hand. Governments can have a big impact on the stock market. Policies like tax cuts, infrastructure spending, and trade agreements can move the market. For example, a big infrastructure bill could be a boon for construction companies, while increased tariffs could hurt companies that rely on global trade. The bottom line, can stocks keep rising? This is the question on everyone's mind. It depends on a lot of factors. From economic indicators to global events, many elements play a role. The market is complex and unpredictable. It can change in the blink of an eye. By understanding these key factors, staying informed and keeping a close eye on market trends, and making smart investment decisions, you can navigate the market more effectively. You can position yourself for success. Remember, don't panic, do your research, and stay calm. Invest for the long haul. Hit that like button, subscribe, and share this video with your friends and family. Until next time, we will continue to bringing you the latest insights and tips, and I'll see you on the next video. Stay savvy and keep investing wisely.